G'day, this is James Shug with Westpac London's end of day report for Wednesday the 10th of July. Look, a range of developments to report. A lot of them occurred before the European Open. We had the Alcoa report, just a very small loss, but basically better earnings and revenue than analysts had expected. That's the first of the latest quarterly earnings round coming through. We also had the EU finance ministers conclude their two-day meeting. Basically what they've achieved is they've agreed to advance Spain some tens of billions of euros to help initiate or start recapitalising their banking system. That's going to happen as soon as possible. The idea is initially that money will be channeled through a Spanish government agency, which means that it will become debt of the sovereign, so it'll add to Spain's indebtedness, which was the big concern that emerged over the last week. But what's going to happen down the road is that the ESM, the European Stability Mechanism, when it's ready, will take the debt off the Spanish government, so it'll be transferred to that authority. So Spain will then, Spain effectively will have a temporary increase in its indebtedness. So it's not quite as much as the EU leaders nearly 2 weeks ago said that they had committed to, but it's a step back in the right direction. There still seems to be disagreement among some finance ministers about this. There's political and legal impediments still. Also, the finance ministers didn't really tell us how what's going to happen with Greece and whether Greece is going to continue to be funded. There's some bond maturities coming up in August that, according to a strict reading of the rules, effectively may not be covered by the bailout because Greece hasn't met the bailout conditions in terms of budget deficit reduction. Spain got an extra year too to get their budget deficit down to 3%. The Italians apparently have some sort of plan that's germinating whereby the ESM will be able to buy the bonds of specific countries where bond markets experience undue fluctuations. But again, the detail around that is still sketchy, although apparently the European Central Bank would be acting as the agent of the ESM in buying those bonds. I mean, it's still beyond my comprehension really why they go to so much effort trying to create these funds when the ECB simply could do it itself by expanding its balance sheet. I mean, I know why. It's with the Germans who've got this fear of inflation that might result from the expansion of the balance sheet, and it's legislated against effectively by their constitution. But a lot of rules I think have been broken, so why not a few German ones? Anyway. Moving on from that, today's news was in the UK, a decent rise in industrial production in May, supported by a further gain in utility output and probably by the extra public holiday, the one less public holiday in May pushed into June for the Jubilee. So these are May figures. That extra working day may have helped benefit the numbers. Also, exports were stronger in May, and we saw a decent rise in June retail sales according to the British Retail Consortium, but again that may have been partly due to that extra public holiday or the Jubilee. So you've got to be very careful about UK data at the moment. There's a lot of one-off factors this year. We've got the Olympics coming up still too, of course, that could push the numbers around. But most of that UK data was positive, and that, along with an Italian industrial production number that beat expectations, meant that European markets did okay this morning, although their gains were somewhat pulled back in the afternoon. We had the US NFIB Small Business Optimism Survey for July. It fell 3 points to its lowest reading for this year so far, and also its steepest drop since mid-2010. That survey, as with many other surveys in the US, had a big burst of activity at the start of the year, and now it seems to be falling away, just like happened in 2011 and indeed in 2010. Although we're less inclined to think that we'll get the bounce at the end of the year that we did see at the end of 2010 and the end of 2011. Also, the first read on July consumer confidence from IBD TIPP picked up 0.3 points in July, but that only reversed a little bit of the 1.8 June drop, and two of the three components were down. Economic outlook, personal finances, just offset by federal policies, actually, the household assessment of federal policies. So that's really it in terms of today's news and last night's news. On the markets then, the gains in Europe not as big as they were, but at the close, FTSE London up 2/3%, French markets up 0.6%, the Germans are up 0.8%, 0.6% rise in Spain, and Italy up 0.4%. And the Dow at the moment is up 0.11%. At 12,750. Note the S&P is down 0.1%, and that's led by technology stocks. The Nasdaq's down 0.4% at the US lunchtime. Commodity markets mostly negative. Copper's down 1%. Crude oil's down almost 1% at $85.19 a barrel, and gold's off 0.15% at $1,587 an ounce. The Aussie dollar at 1.021 is just up a little bit, just over 1.02. It was just under 1.02 yesterday. And in Australia, we've got housing finance coming up. The Deputy Governor of the Reserve Bank, Lowe, is speaking, and Westpac's putting out the Consumer Sentiment Index for July with the Melbourne Institute. Oh, I forgot to mention too, Spanish bond yields, Italian bond yields, they came in today. Spain in about 25 basis points. So bit under 7%, quite a bit under 7% now. That's it for today. Back again tomorrow.